Hey guys, what is going on? Welcome back to the portfolio. Again, I want to start off the video by saying thank you to all the supporters on the channel, all the viewers, all the subscribers. Immensely appreciate the support. Today, I would like to do a continuation video from my prior video talking about a great buy and hold stock, Boeing, a stock that can be essentially bought, put into an investor's portfolio, and you can hold it for 10, 20, 30, 40 plus years. It'll be a winner in your portfolio. Very good dividend income, and overall a very good stock for capital appreciation down the road. However, in doing that video, there were a few responses saying that it's very hard to pick out individual stocks like Boeing. There's also the risk that you're going to be putting your money into a stock that may start trending down, and since you don't have any diversification, all of your money essentially is in one stock, that could be very, very risky moving forward. So I definitely agree with that, especially with all the new investors on the channel. A lot of new investors jumping onto the stock market. There are better ways of putting money into the market initially without having to pick individual winners like a Boeing, for example. And that is putting your money into an exchange traded fund like the stock you see up on screen here, VOO. This is a Vanguard fund, Vanguard S&P 500 ETF. And this is essentially a stock that's traded just like any company stock, but the underlying portfolio is not a company per se, but a collection of different stocks. It can also be bonds, other assets as well. But for the simplicity of talking about an exchange-traded fund, we'll talk about exchange-traded funds that have a collection of stocks as the company, as the assets in which you're buying into. So for example, ETF here, VOO, you can buy one share of this stock, but you're really not buying anything from Vanguard. You're buying a collection of assets that are under the VOO ticker symbol. So you're essentially buying into 500 individual stocks for this one. This is an indexed fund that tracks the S&P 500. You can track any indice. It can track the NASDAQ Composite, NASDAQ 100, the Russell 2000, the FTSE 100, whatever the index may be. It's simply buying stocks that are listed on that particular index, trying to track the overall market. But it doesn't have to do that. It can track, for example, real estate companies. It can track defense companies. It can do the financial sector, whatever it may be. You can have different ETFs for different collections of assets. But I picked this one because this is the overall representation of the overall market. S&P 500, very, very good index fund. Essentially, as the overall market goes up, this fund goes up, and as the overall market comes down, this will go down as well. As we'll kind of see here through the graphs, 1 week it's down 6.16%, 1 month down 7.86%. But you can see here, it's essentially tracking the overall market. Here down 13.62% 1 year, down 4.99%, and over the past 5 years of trading, it's up 55.78%. So a very good fund. Again, it's going to be tracking the overall market. So if the overall market is going down, this fund will go down as well. If we take a look at some of the statistics for my portfolio, I currently have 5 shares here in the Robinhood portfolio, but I do have a large holding of this in other portfolios that I maintain on E-Trade, Vanguard. You can see the statistics here. It's a very large fund, $97.39 billion. And there are funds out there that are even larger than this. Good dividend yield, 1.914% for dividend yield. And going all the way down to the bottom here, you can see a little bit of the About page. VOO tracks a market cap weighted index of U.S. large and mid-cap stocks selected by the S&P 500 committee. So essentially, it's an index fund. And again, this can follow any index fund. There are index funds for the NASDAQ Composite, NASDAQ 100, Russell 2000, VIX, the FTSE 100, even foreign exchanges. There's essentially an ETF for everything. If we take a look at featured in Robinhood here, you can see a selection of the different ETFs here. Essentially, there's one for everything. Here's a Vanguard Total Stock Market ETF. Now let's see if there's some other indices here as well. If we keep going down, I think there's a couple very large Russell 2000 index funds here. Vanguard Growth Fund here, Growth ETF. Essentially, each of these has a little bit different composition of their overall or underlying individual assets in the particular ETF. But again, take a look at this on Robinhood here. You can see that there's 500 different ETFs listed. Here's an iShares Gold Trust. So this is concentrated in precious metals, gold. There's one for silver and other precious metals as well. There's ones in mining companies. So you kind of get the idea behind exchange traded funds. Let's go back to VOO, going back into, again, one of the best, I believe, anyway. Again, I'm not a market professional. I'm simply a retail investor, individual investor, but this is one of my favorite stocks. But let's go into the web page and kind of show you guys exactly what this is all about with regards to the VOO. So here's just an overview of a little bit about VOO, the Vanguard S&P 500 Exchange Traded Fund. You can see product summary. Again, as we discussed, this is investing in stocks in the S&P 500 index representing 500 of the largest U.S. companies. The goal is to closely track that index, track the index's return, which is considered a gauge of the overall U.S. stock market. Again, as the market goes up, this particular ETF will go up. As the market retracts, this one will as well. Offers high potential for investment growth. Share value rises and falls more sharply than that of funds holding bonds, more appropriate for long-term goals where your money's growth is essential. Here are a few of the individual facts about this ETF. Domestic stocks, category is large blend. You can see the ticker symbol VOO. Very important part, I want to detail this and highlight this, is that the expense ratio is very, very low. One of the lowest you can find on an exchange traded fund. Much lower than mutual funds that are more actively managed. Essentially, ETFs are passive funds. They simply follow an index that's prescribed by another person. There's really no active management involved. And you can see there, this is also highlighted, is that it is lower than 96% of funds with similar holdings. So this is a very good part about this particular ETF. Vanguard funds in general as well. Take a look at some of the price points here. Risk potential. It is a little bit more risk, but again, risk equals reward, as you can see on that scale. Less risk, less reward. More risk, more reward. So if you're risk averse, I would not be jumping into this necessarily. But again, overall, this is a very safe fund because it is diversified into a number of underlying individual stocks rather than jumping into, again, from the prior example, one stock like Boeing, you're jumping into 500 individual stocks by being able to trade one exchange traded fund or one stock. You can see the benchmarks against the overall S&P 500, very, very close there. You can see the S&P 500 ETF in blue versus the composite index. You can see they're essentially identical there. Hypothetical growth of $10,000. So you can see over the longer term, this is a very good vehicle for growing your money over the longer term. Take a look at the portfolio composition here. Again, this is going to touch on almost every market segment here. You can see communication services, consumer discretionary, consumer staples are some of the larger holdings. But as we go down here, it looks like information technology is actually larger than those. Healthcare, financials, also stocks that are very prominent in my individual portfolio. Characteristics, you can see 511 individual stocks, so quite a few different stocks. Again, when you buy one ETF exchange traded fund share, you're buying actually fractional shares of 511 different companies. You can see some of the largest holdings as of 11/30/2018, Microsoft, Apple, Amazon, Alphabet, Berkshire Hathaway, I believe that is a Class A stock, Johnson & Johnson, JP Morgan, Chase & Company, Facebook, ExxonMobil, and Pfizer. So very good quality blue chip companies as you would expect from an overall S&P 500 stock. So this is a very good vehicle, again, to jump into the market, a very good vehicle for new investors putting money into the market, not having to necessarily pick individual stock winners, individual stocks from the market. Again, risk potential, there is more risk with this type of strategy, but definitely less risky than putting all your money into one individual stock. Again, this has 511 individual stocks by buying one share of an exchange traded fund. And a stock, like I said, I have in the portfolio in a very large proportion. Just a few shares here on the Robinhood portfolio, but definitely have more shares of this on my E-Trade and Vanguard accounts. So again, just wanted to follow up that prior video with this video, talking about a great exchange traded fund that has an underlying collection of stocks, so you don't necessarily have to put all of your money into one buy and hold stock. You can put it into a buy and hold ETF like VOO here. You essentially get all of the benefits, and essentially get the benefits of instant diversification and having this fund passively managed. There's not a lot of fees as opposed to a mutual fund that would do much of the same as this would, but you would get definitely a lot more in fees over the longer term. And that can be very, very significant if you're thinking about a 30 or 40 year time span for investing in this fund. So again, just wanted to respond to a few viewers on the channel wanting to know a little bit about risk diversification. To do that, I think exchange traded funds are the perfect way any investor, either a savvy, experienced investor or a new investor first jumping onto the market, exchange traded funds like VOO with very low expense ratios are a very good way of putting your money into the market. So again, just wanted to highlight that on this video. Let me know if you guys like VOO, if you guys have a better exchange traded fund that you like over the longer term, basically a buy and hold ETF, one that you can put your money into on a very regular basis, like dollar cost averaging, and then holding it for 20, 30, 40, maybe even 50 plus years before cashing out, getting a little bit of dividend income as well as good capital appreciation overall with the exchange traded fund. So not to make the video too long, I'll kind of end it there. Again, if you guys enjoy the content on the channel, if you guys enjoy the video series, feel free to like, share, and subscribe. Until next video, we'll see you then.